back from vacation, John. I think we have one or two things to cover.
Yeah, welcome back to the Salt Mines. We have tons to cover. I'm excited for these markets. Finally, something different than we've been dealing with for the last couple of years. We are going to go over too much information today. So it's great that you're back, and we'll get right after it.
Let's do it.
Welcome to Hedge Heads, where hosts Jon Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, wheat did what I expected. While I was on vacation, I maybe should have actually bought some wheat.
Hey, you know what? What was that last before you went on vacation? What was the podcast called? It was called "This Isn't the Market You Think It Is."
Yes.
And it wasn't. It took off shortly after that, and that's kind of what we were talking about. We're here at ground zero for bad weather. It was the garden spot, and then you could see every day it's going backwards. Now, in the east, there's been more rain. It's been cooler. And, of course, the world revolves around the east, whether it's New York or Chicago. If it doesn't happen there, it doesn't exist.
Right.
Well, so that's why I was saying, I was, of course, kidding, but that's the mentality around a big city. If it is, if it's not a drought here in Chicago, why would it be anywhere else? So that's kind of the way that we're trading it. Meanwhile, we were here, and this works really good for Minneapolis wheat, by the way. Chicago, if it's not happening in Chicago wheat, they don't care about Minneapolis wheat till it's all burned up. I've actually made some good money over the years by them not caring for a long time, as they provided this opportunity as well. So what was happening in the West is it was burning up, and it's still burning up. They talk about rain.
So typical crops, right?
Yes.
I come home Sunday from being gone for 2 weeks.
Yes.
My yard is no longer green. It's brown, fried. And I'm thinking, no wonder grain prices have been up.
Yes.
We got heat dome. We got weather. And then what happened Sunday night, Monday?
Yeah, I can't even, it's what happened is, it went, I listed to the insiders, they got a list of 3 things that were going on: Iran, Trump.
I thought we were the insiders.
And I don't know if I said to you, I should have, but we have the hot, dry weather, and then you had the Russia-Ukraine thing going on. You had 3 major things going on at once that was really fueling this fire. We've known it's been hot and dry here, but why it hasn't been traded up until now was just because it had started off so good for everybody. Everybody had rain in the West. But now, of course, it's drying out. And so what does this mean for prices? Let's talk about where we may be headed, what past patterns have told us. What I don't like was, Sunday into Monday, like you talked, what happened? Oil went down $8 and the grains completely died. Yesterday we're down 40. Now, I don't like that look that we saw yesterday. I've seen guys fight this long, stay long, too long in the summer. Like at one point, the weather's going to get factored in. We have rain coming in the forecast. I say rain in quotation marks. We'll have to see it fall and verify, but there is chances, and that's really what changed, is more chances for rain and the oil going down. Of course, Iran was begging for a deal, and they want to sign something. We've seen this weekend in, weekend out. No more bombings, which is a good thing, but they're looking for an off-ramp there. Clearly, they're not going to go fully in yet. And oil came up. So that definitely, the grains fell out of favor just on the energy trade alone. Today, we separated ourselves a little bit. That was nice to see. But what that's all great. That's all well and good. But where is it going to go? Now, that's the $1 million question. Here's the way I see it playing out. And this is just my idea of what could happen. We are going to have a crop. There's no doubt the East is good to a degree. The West is not really good right now. So it looks like a very kind of average year is what it's starting to look like to me. I wouldn't be surprised if the yield's down at 179. You're going to hear this endlessly debated, by the way, especially in a year like this. You're going to hear the yield. You're going to see tip back. You're going to hear, I haven't heard too tight tassel. I think it grew too fast for even too tight tassel. Blew that away this year. But you're going to hear everything under the sun, as you usually do, even in bear years. But this one's different. This one, we don't know what we have out there anymore. If we're at 179 with the numbers we have, that gets us down to like pipeline supplies and corn. So this is the razor's edge that we walk every year. The last 2 years were perfect. This year is not perfect. And back to, a couple podcasts ago, you need to, as a producer, really start separating these years. You can't just say, hey, it fell the last 2 years and it's never going to go up again, or it only hit 490 the last 2 years. So that's where I'm going to sell everything because that's resistance or that's where the level is. That's fine if it's profitable for you. But what you want to start doing is realizing each year's an individual year and it trades individually, independent from the other years. Yes, we can have big carryovers like we have, which really limits the upside short term. That's what we're seeing. If we didn't have those big carryovers, this stuff would have went nuts. So you're just seeing a conservative rally here. So don't be disappointed if you see this come off. The insiders are going to get a little message here. We'll have it on Thursday, but I'll send out a little email as well. This is where, if you don't have storage and you needed a rally, you might think about these levels. Now, here's what I think is going to happen. Either the rain's going to come and it'll cool all this stuff off and it'll be confusing and it'll settle off. Yesterday was really telling. It looks like the funds want to not be long anymore. Now, they might not get short this year, but they don't want to be long. Usually, the last 2 years, we found our low in the first week in August. I think one year was August 10th. Last year, it was the first week in August. So it's very common to find a low here. So we could come off. I'm not saying we couldn't. I think that we most likely are going to. It does every year, does every summer. We'll find that out when this rain either comes or it doesn't come this Thursday, right? So if we do come off, what makes this year different is I'm going to be looking, and we're going to be advising guys to be looking for ways to re-own this. That's what I was trying to get to. Where the previous 2 years, there hasn't been a huge need for that. If you're really nimble, you might have been able to get 30, 40 cents out of that. We do, for guys that don't have full storage, we will be looking for strategies that employ that for the first time in years. It's
been a while.
It has. It looks like the supply is going down. Granted, USDA reports could change that. So that's why it's fun. It's gotten fun. Guys are calling. Guys that haven't done anything in their account for a couple of years, maybe a few years even, they're calling. They want to get involved. This is what we do. This is getting back to the good old days. I've really enjoyed the last 2 weeks. I've had a ball. You've been on vacation. I mean, you need that too.
That you're bringing up a good point though, because I was on vacation, which means many family members.
Yes, that's good.
And what do we do? Common question. I explained it all week. What are you up to? What are you watching?
Yeah.
What do you do?
Yep.
So you want to dive into that a little bit?
Yeah, and you hear us talk and you get to know Ryan and I a little bit better, but what actually do we even do? Like, what's it mean to be a broker? What's it mean to have podcasts or any of this stuff? So the last 2 years we've had glut markets, very different markets than this. It's hard to talk about them. Like, yeah, we have too much supply. It's gone up 3 days in a row. That's a big victory. And there's not much going on. It could go up or it could go down. It's stuck in this range. Now you have this planning, like, hey, we need to start thinking about 26, going into 27, what we're going to do for this now new crop is going to turn into old crop really quick. And then what are we doing for 27? So all of a sudden, all these windows and doors open up to a million different directions that you can go. And really, that's what we try to do. We're talking to guys like, if you can't store this, what are we looking to do with these bushels? Like, you have 5,000 bushels. I do think it's going up. I got to get rid of it. We got stuff coming in. But then that guy will make a note. Hey, I want to re-own this 5,000 bushels. Let's look for a spot to get that. So I'll call that guy back when something sets up, or we'll talk back and forth. The next guy will call and say, hey, I got wheat in the bin. And I've been getting a lot of wheat calls. I need to move some of this. Is the market done? What are we doing? And then we'll fill them in on the news. Russia, Ukraine's happening, all this stuff. And you may think, hey, I'm going to go get that on Twitter and I can get that for free. You really can't. You can think you can. Grain merchandisers, I think, will agree with us. Like, we just have a lot more context than you're going to have by reading Twitter. Like, whether it's other commercial guys in the business, other guys that have been in the business for 20, 30 years, and their networks, we're going to have a spider web of networks where we're going to hopefully get you a lot better information than you're getting, and before you're making these decisions. So that's really where we shine. And it used to be used a lot more than it's used now today because information travels so much. But still, the stuff that you're getting online is just that. It's free information. That's exactly what it's worth. You're not going to get, for a couple different reasons, compliance. guys that are registered can't put stuff out on online. And secondly, the guys that do that are if they do that, they're probably not registered, and their job is to get more clients. And it's not that they're not helpful. There's good resources that are. It's not going to help a tremendous amount in your marketing. Like, I know a couple different advisors. They put out plenty of free stuff, but they also want a higher tier where the guy's calling them and they're actually going over plans. That's exactly what we'll do. We'll work with advisors. Let's say you have an advisor. It's very common for us to take orders from their advisors or the person and enter those advisors. So you might have a complete plan that's different from anything we think of, and we're putting those orders in. We're finding these opportunities. Like I say, one guy wants to know what to do with his wheat. Russia-Ukraine's flaring up, and then we'll talk. And it turns out buying a 2-month put is going to be better for this guy than selling the grain, because he has plenty of storage. He just doesn't know if it's going to go up. We looked at the numbers, and it cost like 15 cents. I don't remember what we did. It was something like he was willing to give up 15 cents to see if this Russia-Ukraine thing got worse over the next month and a half. So in that way, we went with a put. The next guy calls, and he's going to be like, I have all this old crop corn. What are we doing with that? So we're answering a lot of questions. We're coming up with specific strategies for our farms. It's a great resource to use. We don't have all the answers. Like, we're just going to have it all figured out every time you call. But we'll get 3 or 4 ideas in front of you that you probably haven't thought of. And then we'll let you choose what best suits your farm. That's the way I like to run it. Other guys will want a little more hands-on involvement. Some guys I'll talk to 3 or 4 or 5 times a day. There was a client that I had that passed away here about 5 or 6 years ago. I think I talked 8 or 9 times a day. Was very common for 15 years. He was one of the better hedgers, traders that I knew. You don't need to talk necessarily to Ryan and I that much, but it's just know that there's guys that call that much a day, where there'll be another guy that I'll hear from, once every 3 or 4 months. I feel like a lot of guys feel like they're going to bother me. It really doesn't bother me to try to figure out something that's going to help the farm. Or strategies. I like to do that. That's why I got in this business. So what we do is help guys try to market a lot better, and they have this open resource. Like, it's our job to get the information before the market opens, and then keep gathering the information throughout the day, and then making that a big shortcut to you. So you could just call, cut through all the chatter online, and then you're going to have like the basic stories that are going on.
I feel like half my calls are, hey, what do you think? What do you think? What do you think of the grain? And then it goes into whatever. I love just having conversation with the clients. So if they're going to call a couple times a day, you get to know a guy real well.
Yeah, really well.
You get to hear all the good, stories,
and you hear a lot of different stories
you're talking about.
Yep.
Some conspiracy theories are always floating out there. You have plenty of those,
and it's real fun. And sometimes it's real sad. I mean, I've had a very good client get buried in his grain bin. Overnight they're just gone. So you see a lot of different things. You hear a lot of different things.
Tough.
But we get the story to you, but I don't think that's important. That's just all pomp and circumstance. That's already in the market. So that's why I go back to reading stuff online. It's not going to help you. It's already been factored in. People like to know why, though, and I have no problem filling them in very quickly why it's doing this. But then wait 5 minutes and it completely changes anyway. Where we really enjoy doing things is figuring out the puzzle, trying to get the perfect idea in front of a guy for the situation. Like, go back to right before corn took off. What I liked personally, and I was recommending to guys, was December 26, 27 corn spread, right? So if you talked to me, you probably had it on. If you didn't talk to me, you might not have. I didn't. There wasn't a lot of time to think about it. But the reason, I'll tell you why I liked it. Because we didn't know what the weather was going to be, but it looked very threatening. It was at the time -24, -25 in the corn. That spread 25, 26, 27 doesn't like to go a lot under 45, and that would be more towards August if it did do that, and it hasn't done that in years. So I'm not saying it couldn't have fallen, but my idea was if corn did fall, that spread was going to fall very fast. Now, here's the best part about that spread. If it goes up, and going back to Al, who used to trade a lot of these spreads, so I'm very familiar with this. We traded for many years. What happens is it starts going higher, and December 27 follows at first. But then a couple days into it, it just starts separating itself. So it becomes like this 3/4 of a futures. So on the way down, it doesn't act like a futures. It acts like a fifth of a futures. And then on the way up, it acts like 3/4. So that's really why I chose that. And you might not understand exactly what I just said there, but it was going to go down. If it was going to go against you, it was going to go slow. You'd have a lot of time to think about it. And if it was going to go up, it was going to go very fast. And that's exactly what happened. Now, we took profits in that today, because I don't like how it acted yesterday. And that's what I'm talking about. Getting back to what we used to do before this thing, like last year, December 26, 27, it was just not going to, 25, 26, it wasn't going to move a lot. There was a big giant supply. But now we don't have that. We have unknowns, and all of a sudden it opens all these doors. And you got to start thinking twice as much as you had to think before, and you try to get ahead of the markets. Now, so what are we doing now? So now we're looking at to see if the rain develops, and then we'll be looking at sides to protect the downside if guys need that. The one market that we're really looking at is soybeans. Does it make sense? And also wheat. Corn, in my opinion, is not high enough. But guys, we're talking about corn puts today. So that's typically what we do, if that made any sense. We're running through scenarios for each guy's individual. One farm might have called today, and they might have been getting out of 40 of those spreads. The next guy calls, and we might be getting out of 1, depending on what the guy did. Everybody does different size. Everybody does different things. The spread might not have worked. I mean, it might have started raining, and we would have got out for a 5-6 cent loss. But it was a good setup. We took it. But why I'm excited is because these markets are much better than the last 2 years.
There's finally something to do.
There's finally something that's predictable. There's people that came off the sidelines say, hey, I think it's threatening in the Middle East. The stock market's going to go down if oil goes up. Can we get involved in long oil and short the stock market? And that's exactly what we did. Now, that person might be using micros. They might be using big contracts. What I'm saying is you can actually read the news, see the hot weather, participate, and make money. It's been a long time since we've seen those markets.
I mean,
which in my opinion are a little bit easier than the
you need to actually
range bound
get out
markets.
of the position to make money.
You do have to get out. And that's why I talked about the corn spread today. We actually got out. Now, I had a July-December on last year that I thought was going to be great. That one definitely didn't work. They don't just all work. So just because I talked about a winner today, it was just an example of what happened. I didn't really want to get long corn, so it was kind of this hybrid idea that had a somewhat limited downside, and then it had its upside. And it went from negative 25 straight to negative 9 3/4. And guys were able to participate in that. So you come up with ideas, you help a farmer, producer, rancher with ideas. Some guys are looking for ideas every single day. Like there isn't a day that goes by with them not doing something. And I'm not talking just randomly getting in the markets. I'm talking with a decisive plan, like whether it's shorting more canola contracts because that's what you're raising this year, or looking at, Minneapolis wheat puts because now you're worried as harvest progress. Every single phone call is different. Everything comes at us every day. We should be able to handle anything that you want. Everyone's always looking for the answer. What's this going to do or where it's at. We get to see a lot of stuff. We get to see a lot of strategies.
There is no one answer.
There is no one answer. One guy will be trading a system and he'll just take his signals and do that. I've seen that. I've seen guys do that. I've seen the next guy is moving average, convergence, divergence. That's all he's into. And then he takes his signals off that. The next guy likes to shoot from the hip. Hey, I've been doing this a long time. The grass is, like you said, it's brown. I've seen this. How do we get long this stuff? Everybody's got a different personality in the markets. Some are tied in with banks who are just on the hedging, the straight and narrow. The bank's watching, they're watching. Some guys are in it for making extra money on the speculative side. There's a million different things going on, and we handle all of them. And in the meantime, open new accounts on the new portal, which I have no idea what to do because we just transferred from RJO to StoneX. So I opened the first new account, and it was a learning experience. I'll leave it at that. It actually wasn't too bad.
RJO had some. It wasn't smooth there either. So
no,
I'm
it was
expecting it to be.
It was getting smoother there, but what this one is. when I asked if this was going to be open in a day, the person nervously kind of said, kind of stammered. I knew it wasn't going to be open in a day. She knew. Well, she was just too nice to say it. But it's about a day and a half in. It's in a lot of ways it's a lot easier, and then in a lot of ways it's harder for no good reason. But I think that you're going to find that anywhere. But I did go through that process, so now I know how to do that.
Thankfully for Dodd-Frank, everything's just peachy and easy.
Yeah,
and just
Frank Dodd solved everything.
Frank Dodd,
Frank
thank
Dodd
you. Just makes it super easy to open all these accounts.
But it's just like it's brand new. It's like a brand new business. Like this is I forgot what we even did. Like.
I do want to stress. I'm sorry, I'm interrupting you, but just going back on the account thing, I do think it's important. Like, you don't have to do anything with an open account, but it does take it 2 days or more to get an account open. Yep. So, if you're thinking, if you don't already have an account, if you think you might, you don't have to fund the account.
No,
you can open it and have it open if you see something, if you call us, and then. The funding can happen fairly quick.
Yeah, it costs nothing to open an account. There's no hidden fees. There's nothing like that. That's another part of the mystery. The guys don't even know how to even get started. It's not like you open an account, you're obligated to put all this money in and then get in over your head. We're exactly the opposite. As a matter of fact, I'm pretty insistent that you understand what you're doing.
I have 3 or 4 people that have zero in their account. They watch, they call, they talk, and... Yep. That's great. I'm glad they're watching and learning.
There's a couple this week, 3 or 4 that I haven't even talked to in 4 or 5 years. And you can tell the markets are getting more exciting when you start getting people way off the sidelines. Other guys, as technology progressed, people prefer to read online or read their text. And I'm telling you, I still am very old school, and I do like to talk to guys. I think that you hear what's going on in their area. They have connections too, so it's beneficial both directions. I understand that guys are busy, and usually the conversations are, pretty what they need to be, like 2-3 minutes. But I also think that it's very helpful for guys that have that information anytime they want. You could go through a week where you're really busy and you just aren't paying attention to the markets. They're not moving a lot. That's not important. But then you're going to get weeks like this that your farm income can depend heavily on. Getting some ideas. Again, I want to be on the side of not committing these bushels. I'd rather cover the downside if I think it's going to go down into the end of the summer, and then leaving the upside open. And that's where all our strategies are headed towards. So to me, it's exciting. It's trying to figure out a puzzle, and we get to do this. We're lucky enough we get to do this every day. Some days I don't say that, but. It's, you try to figure out the puzzle, and it changes every single day. Just right when you're comfortable with what's going on, you get this peace agreement in Iran, and all of a sudden oil's plunging, and everything's different than it was 2 days ago.
I'm sure it will last through next weekend.
Yeah, but that's our job. We're the heat shield of to the chaos. There's chaos out there. Use us, and you can ask away. And the insiders...
Plus, then you can blame us too.
Yeah. As long as I can answer the phone for the insiders, eventually we'll move up to a tier where it'll be a little bit more money. But you part of your membership definitely you're able to call anytime. And, if you have any questions, or you have questions and you might not have an account, if you have questions at what maybe I should do with this file, we'll be more than happy to go over anything that you'd have question-wise if you want to learn more. That's part of the membership as well. Anyways, that's what we do. And we're trying to figure it out every day and not try to fall into the same traps. And that's why I was proud of myself for the corn spread today. I think that it could go up a lot, but it also could go right back to where it started from. We have rain in the forecast. I said if we have rain in the forecast, I was getting out, and I got out. And so these are much more fun markets. I'm already following the July 27, D's 27 spread. A lot of guys are following the December 26th, July 27 spread. Now that one's all about the carry at the elevator and the roll.
Absolutely.
So that's something that guys call about quite a bit this time of year, and it generally bottoms in the first week in August. It can be a very important time of year for that one. So we're just busy trying to market better, trying to get better rolls, trying to get better basis, and just do better in the markets. That is what we try to help people do.
Are you doing anything with soybean spreads? Because I've been watching soy meal and soybeans, spreads on both.
Okay.
I haven't pulled the trigger on anything.
So November 26, November 27 is the one that's moving a lot. I as it was getting hot, warmer, and drier, even contemplated getting in like a November, May. And you're saying, why would November go over the price of May? I learned the hard way. That's a very capable contract to going well over the price of May. Now, do we have the numbers where I'm going to get all bull spread up here after it ran? No, we don't have those numbers yet. But we're getting there, and that's kind of what we were saying is it's that this is an evolving market. It's no longer the old too much grain around no matter what because we had a mega crop like the last 2 years.
Yeah.
Now we don't know what we have out there. We don't know what that carryover is. And we're going to start learning these numbers. Hopefully they don't find a bunch of corn acreage. That was no fun last year. But we have very different markets, and it should provide a lot of opportunities. I think that we take, even if it tops right here temporarily, I think we're taking these highs out later on going into spring or maybe even midwinter. I think we got completely different markets. We do have a lot of weather ahead of us. Keep your eye on that, obviously. Also, don't be afraid of these levels for soybeans. You were talking soybean spreads, but if you need to market some new crop, these are attractive levels again. I don't like it after yesterday's 40-cent drop, but still, I think the funds gave up on this stuff. I wouldn't be surprised to see this sell off, and I'm bullish. Bullish to some degree, I should say, but I wouldn't be surprised to see it sell off because it sells off every summer. Now, whether we made the low already in July, that's very possible. But what I'm saying is there's a crop out there and it will come off. But if we miss rains this week, now if you're a gambler and you got these bushels wide open, you're watching for these rains. If they don't hit where they need to hit, we're probably going to go up next week. But if we do, it's going to roll over and you're not going to like that you waited. So I see the markets pausing here, waiting to see if it's going to rain or not. And it's going to go that direction, meaning if it rains, it's going to go down. But I still think all these pullbacks are now going to be where I'm trying to re-own some of these bushels I sold. And I'm not in a huge hurry for December 27. I know guys were talking, they like that $5 price. And I'm not talking a guy out of it. I just think that there's way too much going on in the world for me to be locking a full year out, well over a year, and just taking an okay price. We've hit $5 all 3 years of the last 3 years. I just hate taking the upside out, so I'm not a big fan of that right now. But again, I'm not here to talk a guy out of marketing. I've heard guys marketing next year's beans. This might be the high. That one's a little different. That's higher market, and we haven't been up these levels. So I won't talk a guy out of that. But I'm not a producer, but if I was, I would not like to have no upside for a full year and 3 months with what's going on right now in the world.
I would like some downside protection, though.
Yep, and that's, for the guys that are listening, then you want to call me. We are definitely looking at downside stuff now. More to protect bushels that you don't want to sell.
I'd say more in beans and wheat than anything else. But
Beans and wheat both are vulnerable up here. I'm not saying run out and buy a put, but at least start looking at some strategies if that rain starts falling. But I don't like the corn. I feel like we went over the numbers today. This guy called in and we went over all kinds of numbers. And the only way we can make it work is sell calls, buy puts. And I wasn't a huge fan of that. This particular guy likes to do it that way. So we figured out something. But why take the upside out when it has so much upside right now? This is not normally happening this time of year. We have a lot better clue of what we have out there. But it is happening this year, and I still have that feeling. I've had it for a long time. Keep the upside open as long as you can on this stuff. But short term, I think that we're running into some headwinds here. I do.
I would agree. I mean, just seasonally. And that has everything to do with, in 12, when we fried the crop to nothing, the real drought year, it came off mid-August. At one point, supplies will come in. It's going to weaken up before that happens. Whether we have just a little pullback from here and then, and then it takes off again, or whether the rain misses and takes off and then we pull back from higher levels, I don't know. But do expect a pullback this summer again, and then expect to find, not these prices anymore.
Well, never say never. We haven't seen all the USA reports. Assuming acreage doesn't go way up, I would think that we're going to improve every report from here on out, if that makes sense.
Let's talk some world markets a little bit. How about crude oil? Because I've been checking that out. Talk about one volatility, but holy call skew still.
Yeah, it's
after a couple of big down days. It's the call skew is crazy wide.
Yeah, it's a tough market. Know what you're doing if you're getting the energies. I definitely have guys in the energies and women. And, it is not an easy market. What's worked best is to get profits and take them, not sticking around stuff for long. I wouldn't suggest it for anybody that isn't just a little bit crazy. I mean, you gotta really want volatility and unpredictable markets to be in energies right now. A more important question is, what should a guy do for inputs? Diesel. I mean, what is the outlook here? Well, it depends on what you read and believe. You're gonna see everything online from doesn't matter what Trump does, like this, whatever happens is already set in motion. We're gonna have severe shortages. To we're going down to $50 a barrel and we're gonna have a glut in 2 months. Nobody knows. No one's really been in this situation, and diesel seems to go up every day. I don't think that we're out of it. My advice is take it day by day and be very, very, very careful in these markets. We should get over to cattle too.
I was just going to say, I looked at cattle and they're almost cheap.
Tons of news in cattle, but here it's really simple. The border opened over the weekend. Well, it didn't open, but the announcement to open it up. They're going to open it up slowly. The market's been selling off 3 weeks before this happened. Yes, word probably got out. But it was, what's driving cattle, and we'll make this really short in cattle, is guys want to know where to, they have hedges on, and most of the calls in cattle right now, where should I lift my hedges? That's why I don't like LRP. You have the choice with hedges. Now, other guys will say once you have a hedge on, you should never take it off. Well, I've been around a long time. There's guys that know what they're doing, and they can take it off whenever they want. So they know the risks to the downside after they take it off. But that's been the major question. So my answer is watch box beef. Really, everything started falling apart, Ryan, here when box beef started falling apart. We're not moving the meat. The economy's slowing. The meat's piling up in a number of different areas. Watch box beef. I don't think we're bottoming cattle until box beef bottoms. That's kind of the long story short. I do think that we will find a reasonable bottom in here somewhere, but I just don't think it's going to happen until box beef. And I know that's not like some crazy, insight. But it really
major prediction.
It really is correlating very highly to the live cattle price, and it had to one day. It could not. Yeah, it could not keep doing what it's doing. And I think if you go back in some of the old podcasts, even 4 or 5 months ago, how unsustainable we were talking about that all. The dam did break. It wasn't sustainable. You can't have box beef going down and bidding up to 260 and expect that to last, and it didn't last. So now it's attached to box beef. And I think with these heavy cattle that are very market ready, the leverage is lost until box beef perks its head up. So that's the answer. Watch box beef. That's going to be your bottom. When can you expect it to bottom? Last year it bottomed before this and went screaming, I think, all of August.
It really did.
That's not going to happen this year. There's like 0% chance that's going to happen this year.
Wow.
Well, I'll give it
Jon.
1. I'll give it 1. I can't give it 0.
Compliance is listening, so let's go with 8%.
Yeah, there you go.
8%.
You fixed it. Thank you for that. It's a very low probability. It's nothing like the last 2 years where you just had a better economy. This one is wore down from every direction in inflation, and it was bound to happen. Ryan and I have been talking about this for 4 years. It was going to show up, and it's showing up. People are buying less of everything.
Didn't stop me from losing money.
Yeah, exactly. I mean, we were wrong for 4 years talking about it, but we talked about it for 4 years. A lot of guys that were stock market shorts have given up. I guess it's going to go up indefinitely. It doesn't even matter what the news is.
I mean, it's down for a minute, and then it's back up if you want to stop.
I know how to stop it. It's not even possible for the stock market to go down. That's exactly how you stop it, right?
Wow.
I'm sorry I did that to everybody.
I mean, the Dow has been super resilient. There you go.
Yes, it has.
I mean, this morning, both the S&P and NASDAQ did not look good. And the Dow just sticking green.
I just don't think they can have it go down. It hasn't gone down since 2008. People argue with me and they're wrong. It just hasn't gone down.
I'm just kidding.
Who's they? The guys with the red.
That's just my favorite thing.
The guys with the red. Yeah,
the guys with the bat phone.
Yep, the bat phone. No, it's supporting the entire economy. If that were to come down, I would think that would cool things off really fast. We'll see how it all plays out. But guys, here's the pop. Let's go over what are the most popular contracts over the last week and a half. Micro crude oils right near the top. Micro Dow. Micro NASDAQ was in there a little bit. Nobody ever does micro S&P. They should.
I always do. Sorry. I do the micro S&P more than... Well, micro Dow than S&P.
So a lot of micros. And I get it. It's very volatile. That's the way I would be in the markets too. A lot in corn. Corn has been popular. And wheat not so much. A little bit of spreading in wheat. Some guys were looking at like long Minneapolis, short Kansas. I'm not in any of this stuff. I think because Kansas was 30 cents ahead of Minneapolis, and we're going to go into harvest weakness, so you're getting a little inner wheat spreading going on. And again, I'm not suggesting do any of this at all. This is just the popular stuff that we're seeing, and a lot of phone calls on grains. I mean, that's really what's been going on. But I'm excited. These markets are nothing like they were, a couple months ago. We have questions. We don't know what the supply is. We're going to have all these exciting USDA reports that everyone's going to get mad at afterwards. All kinds of stuff that we're going to look forward to. But
I actually considered a mini soybeans when I was on vacation because I can do it from my phone.
You like to ruin vacations? Is that what you like to do?
No, I just saw some things and I'm glad I did. But,
no, people make fun of the minis, but mini soybean it moves around enough for you to notice. I mean, you can. It's 1,000 bushel contracts. I would say aren't the biggest contracts out there, and the micros are 100 bushels.
There's no one trades.
No one trades that I've seen.
I have never traded a micro for anyone.
No, the minis,
micro S&P, micro Dow, micro oil,
and people like the minis. Not everybody uses them by any stretch, but people like the micros and minis because it gives them exposure in something they want, and they don't have to watch every ticket every day. It is nice to have different size contracts. Then you're going to have your big players that are, they want 4, 5, 6 oils, 10 oils. I mean, you're going to have your guy. Everybody's got a different category.
Vacations definitely. A little sweat on my hands when I enter 10 crude oil contracts.
I do tend to double check those orders to make sure I don't have it the wrong way, like I did in cattle and lost $14,000. I had a guy. This is what did it top out that one year? 2013. Anyway, when it topped out before this last big market, you don't want to add 6 shorts when you're trying to get out of 6 shorts. And then you also don't want to notice the next day, and you really don't want to notice right before it tops out and goes down, and you would have had all your money back. But if you do, you're going to lose $14,000 in 6 contracts. And
it's important to note that's our loss, not the client's loss for misentering.
Yeah, and that's one thing a lot of people don't know.
If we misenter and you win, it's your win, not our win.
Yeah, a lot of people don't know that rule.
We only get to lose on that one.
So if we make a mistake in order entry, we own it. You know what I mean? So like that guy, not only he wasn't short 12 contracts. He was to get out of those 6 contracts. I'm the one with the 12 contracts, and he got out where he was supposed to get out. So we lose in that. Let's just say I doubled it and it went down and he gained 20,000. He gets that money too. He gets everything either. If it's bad, broker gets it. If it's good, the client gets it, and that's just the way the law reads. So you do want to be careful of those orders. I don't disagree. But I love it. We have different markets. Guys are getting involved. They're fun to talk about, and this is where we can come up with 3 different strategies for the exact same thing, with 3 different ways to do it: limited risk, unlimited risk, or just simple put or call buying. But there's a lot of stuff going on, and it's somewhat predictable, at least for now, anyways.
I'm ready to pull the trigger on 10 contracts or something.
Yeah, it's never easy in a weather market. I mean, you got to, we're going to line you. The stars are going to line up, and it's going to be like you can't This is a great one, Ryan. Let's do 10 contracts, and then we're going to pull the trigger. I don't know what market that's going to be.
I don't yet either.
Euro dollar, or so far futures, maybe right before the interest rate announcement. That's another big thing coming, the interest rate announcement. Yeah. We didn't talk about that, and we will really quick. This is the first one that I can remember where it actually, no one knows what's going to happen here.
No, there's actually been some secrecy, might be too strong, but it's been quiet.
Yeah, we got a new guy in town. He doesn't look like he puts up with anything. Now, so is he going to be the guy that comes in here and raises interest rates right in Trump's face saying, hey, I'm the boss? Or is he going to toe the line and say, hey, I don't see any inflation out there?
I have my opinion. I would guess most people have their opinion, but I'm not stating that on this recorded podcast.
Is he going to say, hey, it looks like prices are going to drop real soon and people aren't paying too much?
All I'm going to say is there's a reason there's a new guy.
And we need to lower rate stats because things are getting too cheap. Is he going to be that guy? It's hard to know. We're going to find out here this week. I'm excited to see. I think they're just going to talk about it, but that'll affect business too. Interest rates going up or down. So we look forward to that. And anyways, just excited to get back in the groove. And we'll talk a lot. We have a partnership forum in here, and we'll talk about that next week. That'll be in the first August episode here.
I'm actually going to run the ad at the very end of this episode. Yeah. If you want a preview of next week, we're going to run an ad at the end.
And we kind of talked about how accounts work just briefly a little bit here today. It was a little chaos, as far as the way we talked about it. We're really going to break down next week exactly how a hedging account operates, or should operate. And there's a few different ways that a guy can go about it. We'll break that down in a little more detail next week.
Love it. Anything else, John?
Well, no, we talked a lot. I felt very scattered.
Big episode.
Yeah, I felt like I was going to be super organized. We're gonna hit these topics right in order, and then I start talking and chaos ensues. It felt like we needed to cover a lot of ground, and if we did cover a lot of ground, did any of it make sense? I hope so.
This was the catch-up episode.
It was the catch-up. We had a lot to get in there. Lots has happened. And the gray markets have completely changed, which makes me happy.
Love it. Why don't you leave your number, John?
218-731-1578.
Thanks, John.
Yep.
This episode of Hedge Heads is brought to you by FM Bank. FM Bank, built for agriculture. With 6 locations across southern and western Minnesota, serving producers throughout Minnesota and the eastern Dakotas. At FM Bank, you're not explaining farming to a banker. You're working with lenders who actually farm themselves and understand the decisions you face every day. FM Bank's segregated hedge and marketing line program gives producers dedicated financing to execute marketing plans, manage risk, and seize market opportunities without tying up operating capital. From field to finance, experience the advantage. Visit mybankfm.com to learn more. Member FDIC.